local index expected to open to subdued global markets this morning as investors are still concerned about the persistent inflation as well as signs of a slowdown in the world's second largest economy. China's economy grew 4.9% in the third quarter of the year, less than the 5.2 that was expected by the market. Well, to talk us through these and other business news, we're joined by Karl Gevers, a portfolio manager and co-founder at Benguela Global Fund Managers. Karl, a very good morning to you. So a lot of varying sentiments influencing trade this morning. Talk us through how the markets opened and the factors driving trade.
Yes, good morning. After a very good week last week, where globally and locally markets were quite positive, ended the JSE also ending the week last week 2.7% up. As you said, we're seeing a bit of pressure in Asia this morning with the Chinese GDP coming below expectations. And then that slowdown, obviously, in the second biggest economy in the world, obviously causing some cause for concern in terms of growth. And then we've got the inflation concerns that do remain. We're seeing the oil price up again, now trading at $85.73, and that's certainly a big driver for inflation globally as well as locally. The rand maintaining its stronger level at 14 rand 67, but our market, early trade looking flattish, marginally up. Resources being the positive driver of the day so far, with industrials currently down 0.5%.
Yeah, let's talk about this interesting case, Karl. The Supreme Court of Appeal overturning a Western Cape High Court ruling that a 48 million rand contribution to a Spur employee share trust was an expense in the production of income and was therefore deductible. Just give us a bit of background into this particular case and how we actually got here.
Yeah, so Spur had a shared incentive scheme for their staff, where they contributed over a period, I think back 2004 to 2010, around there, 48 million. And deducted, used that as a tax deductible amount, which was, appealed by SARS and overturned by the Supreme Court. So overturning the Western Cape High Court decision to allow it as a deductible expense, overturning that, and certainly now, obviously causing a tax liability for Spur, having previously used it as a deduction. But I think also, just in principle, it's one of those that can impact a number of different companies and these kind of schemes. There's small technicalities that determine whether it was an expense in the production of income or not. Certainly, I think the legal and tax fraternity taking note of this one.
Yeah, let's stay in the courts. Interestingly, talking about market stories, the Constitutional Court denying Steinhoff's bid to hear its liquidation case in that jurisdiction of Netherlands, even though the company is registered there. It looks like the settlement agreement is hitting yet another snag. What happens now?
Yeah, so Steinhoff is obviously trying to wrap up all the litigation to try and get to that settlement. But this liquidation, claimed by and it's mainly driven by the owners of Techitown, who are filing for the company to be liquidated within South Africa. And that's certainly a bit of a stumbling block, because a settlement would be a controlled allocate or disposal of assets and negotiated settlement with the claimants, whereas a liquidation would require fire sale, and certainly the expectation would then be that significant value that could still be recovered would be lost. So I think this is certainly, there is a debate whether the Steinhoff obviously claiming that they are a Netherlands-based company, but the High Court ruling that they can be liquidated within South Africa, or that hearing can be done from South Africa, I think at the end of the day, the delay is also causing Steinhoff some headaches in trying to get to the settlement, because we saw creditors had to end of September, had agreed to wait till end of September, and they've had to now push it out to January. So any delay just causing some trouble. We saw the share price also down significantly last week.
Sure. Let's end our chat, Karl, with a bit of company news. Calgrow M3, which builds lower income residential housing and develops the manager's memorial parks, it's expected to return to profit in its 6 months to the end of August. How has this group fared?
Yeah, it's been quite a solid turnaround. They had quite a few initiatives to turn the business around, focusing on their core business, which, as you said, is low-cost housing and memorial parks, selling off some non-core properties to reduce debt, and then also outsourcing the actual physical construction, so closing down their internal construction business. That's enabled them to grow revenue by 45% in the last 6 months, and profit from a loss of 39 million in the prior period to a profit of 48 million. So quite a solid turnaround for Calgrow M3, and certainly doing the right stuff in terms of restructuring.
Yeah, Karl Gevers, thank you very much for that markets update.